Hi, it's Mike with AskTractorMike.com. I'm speaking today with Kenny, and Kenny is the corporate sales manager for S&H Farm Supply, and that's a dealership I worked at when I was in the dealership world. And Kenny is also on the board of directors of a banking institution that follows agricultural sales, and just a guy that when I want to know what's really going on in the industry, I talk to Kenny. And Kenny, we've got our latest tractor sales numbers out, and they look kind of bleak. And I want to point out right now, these numbers are provided by the Association of Equipment Manufacturers, and we want to thank them for supplying us these numbers. Now let's start under 40 horsepower, and I'll put them up on the screen. On the small tractors, that generally follows the economy and people moving out to the country. What do you see trends there?
Yeah, I think it's slowed down some. I think that's largely driven by mortgage interest rates and that rate of movement, the rate of building in the country, the rate of people trading homes has slowed down. I think those two things are directly related.
Got a little inflation on tractor prices too. These small tractors have gotten pricey. I mean, the days of buying I remember when I started in the business, you could get a 30 horsepower tractor for with a loader on it for like $13,000 or $12,000. Those days are long gone. That's got to be having a little bit of an impact too.
Yeah, if you take that same tractor today, it's probably a $25,000 or $26,000 tractor. There are some tractors still under $20,000, but they're very small, subcompact units for the most part. But yeah, there's still inflation in all the products that our business touches. I don't think that's gone away. It's reduced some, but it's still a thing. And we'll talk about it a little bit, but when you add in a few tariff discussions, that's a different kind of inflation, right?
I want to look now, and I'm going to put this slide up that shows the level of inventory to the level of sales. And we're in the first quarter. Inventory levels are going to kind of appear high, or at least these numbers are in the first quarter. The numbers are going to appear high because we're stocking up for a seasonal business. But you see the downward trend in sales. There's also a downward trend in inventory. Are there bargains out there because there's too much inventory anywhere, or how's that all come together?
Well, there are certainly aggressive programs by most manufacturers, so programs have been good. As market interest rates have remained pretty steady, even with Fed cuts at the central bank, we've seen manufacturers recognize that low rate finance programs are moving the needle a little bit on some of the products, and so there are a lot of 0 for 72 sales programs, some 0 for 84s. Those are getting some action. People are more concerned about rate and payment than they are what the actual price of the unit is, and I think that's just a function of the environment we're in and the way the finance industry is working.
I guess if you're thinking about buying something right now, and you mentioned the tariff situation, I don't see any of these things getting much cheaper. Do you?
I don't think, if you look at wage increases through the auto workers for factory workers around the world, wages are increasing. Raw material prices are still increasing, so how would the price of a tractor be less? I think that's a fair question.
And what usually drives the price down is when you've got too much inventory, and looking at the inventory levels, we're about where we should be, really.
Yeah, inventory was actually worse in 2024 than it is in 2025. We probably talked about this in the time past, but we went through that COVID area. You couldn't build enough. We asked manufacturers for more. They did what we asked. They built more. They built a lot more. And then we said, whoa, we don't need near that much. And what do you do with it after you've built it? You sell it, right? It becomes inventory somewhere. And we worked through a lot of that. And so inventories are, even though they're still big compared to where the market is, the market continues to move down as far as units, and inventory is moving down, but it's moving down slower than the market.
Let's look at mid-range now. What do we see going on there?
Mid-range, that's where we typically live. That's a big portion of our tractor sales, and I think there's just some price shock, and maybe some guys have said, a new tractor is just out of reach for me now. I'm going to be a used buyer. I'll look in the used market. I still need a tractor, but that price is just not something that I'm okay with. And I'm not going to give a make or model, but just take one particular tractor. We started selling that in, say, 2022 that tractor, 65 PTO horsepower, sold for $49,000. And today, that tractor sells for about $67,000. And so that's a big shock for our customer to absorb.
Let's look here at inventory levels. Are we seeing any problems there? It looks like they've gotten a little bit better from a manufacturer and dealer standpoint from where they were a year ago.
Yeah, I think, I don't know of any brand today that's really having an issue in any particular size segment of the product. I think as far as from a customer's point of view, it's a great time to shop for a tractor. Everybody's got tractors and everybody's got deals.
And interest rates good on mid-range tractors. Is that where the manufacturers are putting incentives to try to drum up a little bit of business?
Yeah, you can sure find a 0 for 60 program out there and probably a 2.9 for 84 months program if you shop a little bit.
Over 100 horsepower is also down. What's going on? We've talked about it a lot, but row crop deals not too good.
Yeah, this one probably surprises me more, especially in our area. I don't think any of the laws of economics have been repealed, and we're in a heavy livestock area here, and we're at record high calf prices, but we're also at record high land prices. We're at a higher interest rate, and so our customers have money in their bank accounts, money in their pocket. They can buy what they want. So something just tells me that, hey, we're comfortable having a little money in the bank. Maybe we're going to do some capital improvements. Maybe we're going to build some infrastructure on our farm. We've had several decent years. Maybe we've got our equipment fairly updated and we're just okay. When we look at the price of that tractor, just say, I think if I have to have one, I can buy it when I need it, but I'm not going to get too far out ahead of that need. I'm not going to plan too far ahead. So I look for there to be quite a bit of in-season buying. If I have trouble with my old one or breakdown, it's no problem for me to buy a new one, but I feel really comfortable just sitting on my cash right now.
You bring up a good point when you say over 100 horsepower. If you go 100 to 120, that could be a livestock producer, probably is a livestock producer. You get up in the upper ranges of that, it's a row crop guy. Mm-hmm. And so, it's very possible, because these numbers aren't broken down more, that the smaller end is doing really well, and the top end is not doing as well because of row crop prices.
It could be. In our case, it's definitely hitting our market. Our tractor segment in that size year to date is off more than the national average. It's a little bit of a conundrum for me. I kind of scratch my head. With the economic environment that we've got, there's no reason for people not to be buying these units, but they aren't. And so I attribute that largely to just the uncertainty that we've had on a world economic stage in the U.S. with the current administration, their policies on trade and tariff. I think we've got some people, even if they support the president, they are kind of shaken from a certainty of what's next point of view, and they're just comfortable holding on to cash.
When we get to the next segment, the articulated tractors, that market has been strong the last few years as row crop prices were good. It's dropped off, but we're not talking about a lot of units there. What do you see there?
Oh, there's a lot of stress in the cash crop segment, and so I think they're well equipped. They've had good years. Their equipment's up to date. There are some large operations that need to trade on a regular basis. I don't see a lot of those deals, but the ones I have seen what it costs to trade machines year to year. That trade difference has doubled or more, and so it's just been a lot harder pill to swallow, and the risk reward for trading versus running that machine another year is just not there. And so they're just holding on to their cards and saying, we're going to wait till we have to.
Combines are way down. And again, we're not talking about a big number of units, but a pretty substantial drop in combine sales. Same thing there?
Same thing, yeah. It's just it's a functionality of where their income comes from. It's shrunk a lot. I think some of the numbers I've seen show that segment, net farm income being down 20-25%, and that's a big adjustment.
I rarely talk about Canada, and I've got some folks that watch my videos in Canada, but we got a real anomaly going right now with Canada in the first quarter. And the first quarter would be pre-tariffs and pre a lot of uncertainty that we've experienced since 1st of April. But Canadian sales on some segments are actually up, and the ones that are down are not down as much. Do you follow Canada at all to know what's going on up there?
I really don't, Mike. I find those numbers intriguing as well, but I think, there's usually an underlying factor behind all the data, and I would guess this somehow relates to the difference in the way that their farmers are supported at a national subsidy level, where there's been a real pullback in the U.S. and how farm support programs work, and I'm going to guess that the European model that's largely in place in Canada is probably much more favorable.
So where do we go from here? What do you see the next quarter look like?
I would guess that this uncertainty that we talk about, where the farmer, the producer, the homeowner, the rural lifestyler is just kind of stalling his purchase, and you've got manufacturers who are just going from stop to full throttle. It's just a wild environment.
And really probably no way to know exactly where it comes out.
There isn't. I mean, there has to be. You have to reach somehow a point of stability, right? Before businesses require planning, they just do. And until you can make a plan that makes sense, and you know what your operating environment is, you're not going to come to me as a customer and say, Mr. Dealer, I want to buy a 100 horsepower tractor. I don't care what the cost is. I just want one. That just doesn't happen in our world, and that's kind of where this environment puts you.
So we got a lot of ways it could go between now and the end of the year for the rest of the year sales.
Yes, it's going to be an interesting year to watch develop. I think it's going to be a lot of just-in-time purchases. I think inventories are largely going to be readily available unless you want something very specific, and then I think you could wait a while.
All right. Thanks, Kenny.
Yeah.
Appreciate you watching my videos. I would be honored if you would subscribe to my YouTube channel, and you could do that by clicking the mic face icon and check the bell so you get notified when I post future videos. Here's a link to my website and the Tractor Fund Store with cool things for sale for the tractor owner that help support my channel. And here's another couple of videos you might want to watch. Thanks for watching.